A cinematic, documentary-style narrative with a tone of urgent revelation, building towards an inevitable historical conclusion. For the first time in over 3 decades, a fundamental crack is appearing in the foundation of the American financial psyche. Two critical gauges of public sentiment, which have moved in tandem for a generation, are now violently pulling apart. On one hand, faith in the stock market soars at euphoric .com bubble levels. On the other, personal economic outlooks have plunged to the depths of the great financial crisis. This is not a minor anomaly. It is a symptom of a deep, systemic rupture. A schism between Wall Street and Main Street that signals one thing: the system is beginning to break. To understand this rupture, we must look at the broken promise of income. For half a century, from the 1960s to 2008, real personal income in the U.S. grew at a steady, reliable pace of nearly 3% per year. This created a predictable life trajectory, a concept economists call permanent income. People could plan their futures, buy homes, and save for retirement based on this dependable growth. But in 2008, that promise was shattered. Income growth fell off its long-term track and never recovered. The expectations forged in the pre-crisis world have consistently failed to materialize. A gap opened between expectation and reality, and recently, that gap has begun to widen into a chasm. So, we live in two parallel realities. In one, people are perpetually disappointed by their paychecks, which fail to keep pace with their financial expectations. In the other, the stock market has delivered a staggering 300% return, even after inflation. This is the core of the disconnect. The financial economy of assets has become completely untethered from the real economy of wages. But physics and economics tell us that such a divergence cannot last forever. One must eventually converge with the other. This inevitable collision is what many are calling the Great Reset. The only question is, how violent will the reconciliation be? The engine driving this divide is visible in two key metrics. While the personal savings rate of the average American has collapsed from 13% to a meager 4%, corporate profit margins have climbed to record highs. This is the transfer of wealth in action. Those profits flow to shareholders, who reinvest rather than spend, fueling a self-perpetuating cycle in financial assets: stocks, gold, Bitcoin, real estate. And nowhere is this more painful than in housing, the single biggest expense for most families. The historic price-to-income ratio has blown out from 4x to 7x, making shelter twice as unaffordable. When your income is stagnant and your largest cost is exploding, your ability to save and invest, to participate in this asset boom, evaporates. You are trapped. The consequence of this trap is a collapse of economic optimism and a surge in wealth inequality not seen since the 1920s. This chart tells a haunting story. The share of wealth owned by the top 0.1% today mirrors the peak of 1929. And just like then, this peak coincided perfectly with a market top. The reset that followed was triggered by a powerful catalyst: a massive increase in corporate taxes. From 0% in the 1910s to nearly 40%, this policy squeezed corporate profits, crashed asset prices, and caused immense short-term pain. But it also reversed the trend of wealth inequality, laying the groundwork for the prosperous, broad-based growth of the mid-20th century. The pendulum has now swung to the other extreme. Today, corporate taxes sit at their lowest level since the 1930s, and wealth inequality at its highest. The stage is set. We believe the Great Reset will commence when this line, the corporate tax rate, is forced to reverse its decades-long decline and begins to climb. This will likely be the pin that pricks the asset bubble, causing a violent repricing similar to the 1930s. The market, always forward-looking, may peak before the policy is even enacted, just as it did in 1929. For now, the winds favor assets. But a storm is gathering. And when the trend flips, the reversal will be brutal and unforgiving.